the last couple of years. It's an interim strategy for the next 3 years, and this has not changed. For those who have been with us, as the chairman said earlier, over the many years, and I want to thank you for joining the meeting, and new shareholders who have joined this year, largely for priorities, simplifying the world of our customers and making sure they are able to progress in activities they face. We put our customers first as a priority as a business. We're investing very strongly in the digital businesses and becoming as efficient as we can. We've been doing that in the last couple of years, and making sure our regional businesses become stronger in terms of contribution to the group. We've not gone to a new market in the last year. We remain very strongly after acquiring the businesses in SBK a year ago, but we remain in the same footprints for this particular financial year, and that is the short term. But we have ambitions to be able to scale our businesses as we go into the next year. A little bit about our investments and digital businesses. So we have launched just recently a Vuma platform. We remain very recognized as an institution across the world. And the year last year, in addition to the pandemic, we made a lot of activities, and I'd like to mention just a couple of a few. Of course, the key priority was defending our staff, ensuring our customers are served. We got affected just like many of you. We protected. Remember, we remained in operation across the region. We are able to make a key investment decision around the Banque Populaire Du Rwanda and BancABC in Tanzania. We completed very successfully a management restructure, which I've mentioned, the new team just earlier on, and many other actions over the year. And we remain very strongly ranked globally as one of the largest banks in this part of the world, ranked 667 globally by the Banker's Top 1000 Banks. And much more critically for me is that as we build sustainability and green lending, we remain the first institution in this part of the world to be accredited by the Green Climate Fund to lend into medium and large institutions on climate issues, changing the environments, up to $250 million. And I think those were the highlights I'd like to mention for the last year. On our SMEs or our small and medium enterprises, we continue to restructure more than close to 4,000 loan facilities. Overall, more than 106 billion loans were restructured. We waived our mobile banking facilities as we work with the regulator. We continue to provide specific intervention to the most vulnerable in the market. We did food support. We provided personal protective equipment. We were in I-13 in the National Emergency Fund for COVID-19. And I would say that the progress, whereas we are not far yet from the crisis, and we are doing vaccinations today as we started early this year, I'm happy to see that there's some good progress. So overall, your bank has remained resilient amidst the difficult environment of COVID-19, and we are hopeful and progressive that the future will remain positive for the business. It's the right momentum you see, more transactions migrating into a digital platform, largely mobile. This is a key area for our business. We see our agents and internet banking and point of sale remaining very strong, and this is where the bank is going. This is the new business models. This is where the revenue for the bank will come from. And you can see all those pillars. Value of mobile transactions, more than 1 trillion shillings last year. We expect to double that in 2 years. Value of agency transactions, nearly 500 billion shillings this year. Some difficulties last year in a point of sale businesses, but I'm happy to see that is recovering strongly this year of 2021, and as well as the ATM transactions that we see. So in that space, are we investing in the businesses or the bank in the new emerging areas? This is becoming a key part of our strategy, and I'm happy to show that the numbers are demonstrating the investment you're making.
Ladies and gentlemen, the COVID-19 pandemic has significantly altered the economic outlook of the region and all the markets we operate in. For our business, when the crisis hit East Africa, our focus immediately shifted to the safety and well-being of our staff, customers, shareholders, families, and other stakeholders. Given the impact of the pandemic, our 2020 financial results were commendable. The group maintained the balance sheet growth momentum it has built over the last few years, with our assets inching closer to the shilling 1 trillion mark, booking Kenya shillings 987.8 billion, which is a 10% jump over the previous year. The group also reported a net profit of Kenya shillings 19.6 billion for the full year ending December 2020. This was a 22% decline from the 25.2 billion shillings recorded a year earlier due to higher provisions for loan losses and subdued economic activity during the period under review. The contribution from subsidiaries outside KCB Bank Kenya have grown substantially over the last 2 years, from 9% to the current 14%, with ongoing efforts to further enhance our performance. Ladies and gentlemen, we advanced our plan towards scaling to achieve regional relevance through the signing of a definitive agreement with Atlas Mara Limited for the acquisition of up to 100% of the issued share capital of Banque Populaire Du Rwanda PLC and 100% stake in the African Banking Corporation Tanzania Limited. The two transactions, which are subject to approval today as well as other regulatory approvals, will improve and increase the brand's footprint and market share while reinforcing our existing market capabilities. Shareholders, in line with the group's ambition to remain positioned and responsive for sustainability, opportunity and growth, the board approved a new group organization structure which came into effect on January 1, 2021. This is expected to help consolidate and grow the group's business, align brand communication, leverage social impact synergies, enhance credit management, focus on service experience, and subsidiaries to support and strengthen our customer value propositions.